Nobody talks about it. It subtracts from GDP, but it's also highly inflationary because it's going to put a lot of pressure on the dollar. I still think that this is the best way right now to play the gold sector is through these mining stocks. I think they're still dirt cheap. There's incredible value there. People should be buying these stocks.
Welcome back. Today we highlight Peter Schiff's latest insights. He contrasts smaller companies' sensitivity to weak economic data with big tech's reliance on rate cuts for future growth. Gold had an outstanding week, closing above $2,190 and nearing its all-time high. Gold stocks also surged. Peter sees gold mining stocks as a golden opportunity, expecting them to outperform due to sustained high gold prices. According to Schiff, these undervalued stocks are a smart investment now. Don't miss out, watch till the end, and let's start the video.
Earlier in the week, we did get other economic data points that came out to support the narrative that the economy is weakening, or rather to challenge the false narrative that the economy is strong. We got the ISM manufacturing number. That came out weaker than expected. The consensus was 49.1, and the actual number was 48.5. But as weak as the manufacturing number was, the service sector was even worse. And in fact, last month, we got a big reaction in the markets when the ISM service index came out much higher than expected for May. We got 53.8, and that was like an aberration. And at the time, that's what I said. I said, look, this is a one-off. We've had really weak numbers, and this is just a one-time event, and the market shouldn't get excited. Well, the anticipation was for another strong number, 53, not quite as strong as the 53.8, but they were looking for 53. The number came out at 48.8, complete collapse, right back to the lousy numbers we had before June. In fact, the range of estimates was from a low of 52 to a high of 55.5. So nobody expected the ISM service index to collapse, but that's exactly what it did. In fact, that's exactly what I said was going to happen when we got that ridiculously strong one-off number a month ago. Also, factory orders for May, weak again. They were looking for up 0.2. We got minus 0.5, and we revised the prior month from up 0.7 to up 0.4. So more weakness in manufacturing. Again, we lost manufacturing jobs this month, and that's why. Trade deficit, again, didn't come out worse than expected, but it was another huge number at $75.1 billion. That's the unified trade deficit in goods and services for May. Nobody talks about it. It subtracts from GDP, but it's also highly inflationary because it's going to put a lot of pressure on the dollar. And of course, we also got the ADP employment report that was overshadowed by the government number that came out on Friday. That one came out a day early on Wednesday because, of course, July 4th, how could I forget, was Independence Day holiday. And so the markets were closed. Oh, by the way, I saw Joe Biden kind of confuse the 4th of July with Christmas when he spoke and he said, ho, 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 a happy 4th of July. I was expecting him to say Merry Christmas. Maybe he caught himself and realized, but I don't know where the Santa Claus thing came out. But the markets were closed in observance of Independence Day. And so we got the ADP report always comes out on Wednesday. And that was 150,000 versus the 161,000 that had been expected, so slightly below. But we got the Challenger job cut number. That one came out on Wednesday, which was a day early. Not as many job cuts as the prior month, but still, again, a big number, 48,000, 786,000 layoffs announced in the month of June. So again, weak economic data, weak jobs data, strong inflation data. All of this is why the odds for rate cuts this year, 2 rate cuts, in fact, have increased. But of course, it also increases the odds, which are already pretty high, that Donald Trump is elected to his second term, and he ends up being the first and president since Grover Cleveland, who was one of my favorite presidents. In fact, I wish Donald Trump could find his inner Grover Cleveland and have an administration similar to Grover Cleveland, who happened to be a Democrat, probably the last great Democratic president. Grover Cleveland. But he's also the last president to serve 2 non-consecutive terms. And if Trump is reelected, again, he'll be the only president since Grover Cleveland to accomplish that. Well, the public may not like the weak economy, but Wall Street does. Stocks rallied on Friday. In fact, the S&P and NASDAQ, led by big tech, made new all-time record highs, at least nominal highs in terms of dollars. In fact, for the week, the NASDAQ was up 2.8%, and the triple Qs, which is just the biggest of the NASDAQ stocks, was up 3%. Not as big a gain in the S&P 500, although record territory, up 1.3% on the week. The Dow was up 0.78%. Only the Russell 2000 ended up down on the week. Probably more economically sensitive, a lot of smaller companies that are more sensitive to the weak economic data. The big tech stocks, they're the ones that are more looking for rate cuts to boost their valuations for all the growth that the markets are inferring is going to happen into the future. But also gold. Gold had a nice week. It closed above 2,390 or right about there. So close to 2,400 again, just about 2% off its all-time record high. Gold was up 2.64% on the week. Silver also had a strong week. Gold stocks had a good week. The GDX up 5.3% on the week. GDXJ up 5.85% on the week. That index now, or the GDX, is only about 3% below its record high. So it has been gaining back some of what it lost, but the indexes are still way behind where they should be. I mean, gold is holding at a very high price. I expect a lot of these gold mining companies to report much better earnings than the street expects because the price of gold is staying at much higher prices for a much longer period of time than these analysts penciled into their earnings forecast. So I still think that this is the best way right now to play the gold sector is through these mining stocks. I think they're still dirt cheap. There's incredible value there. People should be buying these stocks. Gold itself, of course, I like physical silver still. It's back above 30. In fact, it's back above $31 an ounce. We did get below 29 again, very briefly. And again, I think 29 is for silver what 2000 used to be for gold. If you get a chance to buy it below that level, you definitely want to do it. The problem is there may not be another chance to buy it that cheap. I think buying silver even above 31, 32 in that area is still very cheap. I think pretty soon 50 is going to be the new 30. In fact, I think 50 is going to be the support for silver. So to buy some physical silver, you want to talk to the representatives at Schiff Gold. I mean, the name is Schiff Gold, but it's Schiff Gold and silver. In fact, we sell platinum and palladium as well. I mean, those metals are probably also pretty good buys, but right now I'd put money into silver. So you can talk to the Schiff Gold representatives about buying some silver.
Thanks for tuning in. If you found Peter Schiff's insights valuable, give us a thumbs up and subscribe for more market updates and investment tips. Hit the notification bell so you never miss an update. Until next time, happy investing.